Hi, good morning, everyone. This is Kelvin from Sinegy, and thank you for joining me. We are one of the digital asset exchange, also known as DEX here in Malaysia, and I'm proud to say that we are the first homegrown DEX, also regulated by the Securities Commission of Malaysia. We are a fintech startup based in Penang, the street food capital of Malaysia, and we have been in the business since mid-2017. At the time, the price of Bitcoin was roughly about $2,000 US, and oftentimes I always joke and I always joke with my peers and say, maybe we, instead of investing in the business, we should have just put all the money into Bitcoin. The team really started by trading crypto asset. And by doing that, we got a sense of the platform that we wanted to build for the Malaysian market. So a little bit about myself. I was actually very fortunate to have been given the opportunity to start my career in capital markets at a very young age. In fact, I started when I was 20 years old. I first started by working at the help desk of Fleet Bank, which after a merger and acquisition is now part of Bank of America. So from the help desk, I eventually worked my way up to become a market maker and also a foreign equity arbitrage trader for the bank. And I think without a doubt, my passion now really resides in me sharing these trading strategies with you. So Digital Capital Markets 2.0. If you're ever in Penang, please do visit our office. When you're there, you will notice one thing. Despite running an exchange, we do not actually have a back office. When I was working in New York, the trading floor, in fact, was the size of the back office, and it was pretty big. Trade settlement was always a few days after the trade occurred. And this is only possible because digital assets like crypto transacts on the blockchain. So I really do believe that the capital markets of the future will be powered by the blockchain for more efficient settlement. So how do we define digital assets? Well, the obvious answer is obviously not tangible. It's not something that we can touch with our hands. If you look at the bank balance on your mobile device, those numbers are just a number which is recorded on a database. It's not the same case for crypto asset. By utilizing the blockchain, records for crypto assets are actually tamper-proof and also immutable. And this is essentially what the future looks like to me. If you think that crypto assets will replace the stock market, then that's a $90 billion potential out there. If you think that crypto assets will eventually replace the bond market, you're looking at 128 trillion worth of market opportunity. And as you can see from the slide here, given the current market capitalization of crypto asset, we do have a long way to go still. So here are some of the things that we're working on. We do have our plates quite full. On the far left, you will see Marketplace. That is our flagship crypto exchange, right? So we are considered to be a fiat on-ramp. So you come to our platform, you give us MYR to convert them into BTC. We also operate what we call spot crypto. So this is essentially the real Bitcoin, not derivatives like CFDs, etc. In the middle there, Sinegy Labs, this is our joint venture with a company in Malaysia called Finibo. So over here, what we're doing is we're building technologies for the exchange. At the same time, we are also developing trading boards for the crypto market. And the last one on the far right, digital asset custodian. This is a very interesting space to watch over the coming months or even years, because if you think about it, we've heard a lot of stories about crypto exchanges being hacked, etc. And a regulated approach to doing custody for these digital assets will enable us to all sleep better at night. So true to our name, to achieve our verticals, we definitely don't intend to go it alone. Here are some of our partners, mostly through joint ventures and some also through investments. So with Neuroware, we are in pursuit of the DAC license, Digital Asset Custodian. FinHero and also Pentype are both Penang fintech startups as well. So Pentype is in pursuit of the Digital Investment Manager license, which is aka also known as robo-advisory. FinHero develops peer-to-peer financing software solutions, and we did partner with them to pursue the IEO operator. let's be honest, not all that we pursue will be successful and is something that we are prepared for. So because my background, I came from traditional capital markets, I always felt that I should be the bridge between my friends who are still there and the new crypto asset space. So we always joke that the crypto asset space is considered the dark side. Mainly because we speak the same language and because I've been in the market for years, I do know what they like to see. So the people that we're looking to collaborate with obviously are fintech players, because we ourselves are a fintech player. With the brokerages, we would like to introduce to them a new asset class for their existing clients to trade. For the fund managers, we're pointing them to where they can find yield in the crypto asset space. And even for the accountants, we are working closely with them to ensure that statements that are generated through active trading via exchanges can be auditable easily. So what makes our value proposition special? Well, the first is we pay you to trade, right? So this is very similar to you getting a cashback by putting an order into an exchange. Now, let's define what a maker and a taker is. So if you're a maker, the term actually comes from a maker of liquidity. So think about it this way. If you see one Bitcoin for sale at 200,000 ringgit, the sell order is placed into the exchange. When you execute a buy order that removes the order from the exchange, you are considered to be a taker of liquidity. The seller, however, by putting the sell order into the exchange and waiting for the execution, is actually a maker of liquidity. So if you come to our platform and you're a maker of liquidity, we actually give you a trading rebate of 0.25%, which is 25 basis points. And you can earn these rebates in a variety of assets. If you're placing a buy order, the cashback will be given to you in Ringgit Malaysia. If you're placing a sell order in Bitcoin, the rebate will be given to you in BTC. And if you're placing a sell order in Ethereum, you're earning that rebate in Ether. So this, while this concept is generally new, market makers will be very familiar with these terms. And so now for the more exciting stuff. So what is market making? Market making is actually derived from the word making a market. And the reason why you don't see this as a common strategy is because it's mostly used by institutions like the banks and rarely by the average retail trader. Where can you see these market makers in action? Well, in Malaysia, you can actually see them in call or put warrants. And in America, warrants are actually considered options. Now, because the market structure is slightly different in the States, market makers can also be seen in the equity or stock market. And this is basically how I started my career in New York. The first thing that I want to point out is market makers always participate on both sides of the order book. And by being able to participate on both sides of the order book, they are able to capture what we call a spread. So this is a typical baud rate. And with this slide, I just want to say that there is a saying that the house always wins, right? And this is what the market makers always have as an upper hand. So if you look at the order book of an exchange, the market makers will always quote and buy from the bid side of the order book. At the same time, they will always sell on the ask side of the order book. Typical baud rate, if you walk into a bank to buy US dollar, we'll see this at the bank. And if you look at this baud rate, you're actually buying the US dollar at 4.218. And when you sell, you're not selling at 4.218. A lot of people get the wrong idea. That's actually the bank selling to you. When you sell, you're actually selling at 4.096. So in this example, the bank is actually making a market for the US dollar. So what is market making? Market making is actually not complicated. It is actually just it's arbitrage. And arbitrage is the simultaneous buying and selling of an asset in different markets to profit from the price, from the difference in price. This is actually not the first article that I've seen in The Economist on luxury goods arbitrage. And I do know someone who actually does this for a living. So in this case, would you consider him to be a market maker? The honest answer is yes. Even though he's not making a market in traditional trading instruments, he is in fact making a market around luxury goods. So are there risks involved in market arbitrage? Of course, there is. So in the case of luxury goods, this guy is actually taking advantage of the tax refund offered in Paris, where he can buy the bags, and it is not necessarily legit. At the same time, when you take on this inventory, right, you're taking on the risk of the inventory price fluctuation, right? And if you're buying an asset that is abroad, then obviously there's foreign currency risk involved. So in the case of the Louis Vuitton bags, you're actually looking at a euro currency FX exposure to the Malaysian ringgit. So even though I started my career in market making, I actually eventually ended up in the foreign equity arbitrage division of the bank. And while the name may sound a little intimidating, it's actually not complicated, right? So if you look at shares which are listed in dual countries, especially in 2 different time zones, there will always be a price difference. So my job there was essentially to take advantage of the price difference. And you can do that through trading the ADRs, the American Depository Receipts, which are denominated in US dollar, at the same time arbitraging it to the ordinary shares in the home country. So once a trade occurs, it will always create an arbitrage opportunity. And as you can see from this slide here, in order to participate in this game, you obviously need to go through a few intermediaries, right? Institutions, one to buy the US dollar and at the same time to also convert the shares. The other intermediary that you don't see here on this slide is actually a broker that you need to go through. So if you think about it, this is why the game is particularly skewed towards the institution, because they can easily perform one of these 3 functions at cost. So what is a decentralized asset? Crypto assets are also a decentralized asset. And my interpretation of a decentralized asset is an asset class that disperses the function of a central authority. So whether it's a Bitcoin in Malaysia or in US, it is still the same Bitcoin. Now, there's another method to trade crypto assets because of the decentralized nature, and that is to use a market-making arbitrage strategy. All you need to do is just replace the LV bags with Bitcoin and essentially buy from an exchange with a lower price and then sell to an exchange with a higher price. And yes, even though the inventory might fluctuate, but if you keep your inventory risk small, it's obviously not going to impact you very much. And I always look at it as opening a grocery store, right? If you open a grocery store, you do need to also hold some supplies. Right? You can't not have any supplies. So while the stock exchanges have been around for, I would say, probably over 100 years, I think most people have only begun trading shares for the first time since the pandemic. And I don't know if most of you know, but the crypto market is the first continuous trading asset class in the world. So the market never sleeps, money never sleeps. Once again, by utilizing the blockchain for efficient settlement, we now have an asset class that can trade round the clock. So I mean, particularly for me, I like to trade at 5 in the morning when it's very quiet and I can focus on the trades, etc. So if the thing that excites me the most, I guess, is that with the adoption for digital asset, I really do look forward to see now that now that it's possible for everyone to basically evolve and use market making as a strategy and to become a market maker. So just to round things up a little before we end, I just want to highlight that we do accept corporate accounts as well. So if you're looking to trade bigger sizes, trading with an entity does come with some benefits. For one, if you incur trading losses, you are able to carry the losses forward. The other thing also is that we do have the lowest fee structure in the market. And there's no hidden T&Cs, right? Ours is not a tiered structure. It's a very straightforward structure. And I hope that you will join us for some of our webinars as well, which we conduct every 2 weeks, right? To learn more about this asset class and how you're able to use these trading strategies to create an active income, not a passive income, an active income for your crypto asset. And yep, that's it. Thank you very much.